Welcome to the chat. The essence of today's lesson is for us to answer the fundamental question that bewilders all traders, which is the question that what is a break of structure? What identifies as a break of market structure? Firstly, we need to know that the market has its structure, and the structure of the market usually is respected in an order which creates an order flow. Knowing when a structure is broken is very important for traders because it gives informed decisions. And in the market, a trader always has to be well informed in every decision he makes. A trader at all times needs to be aware of what price is doing, as this allows for an insight into what price is going to do in future. The trader who makes most money is the trader who successfully predicts the future, and most of the times he does what? He manages his risks when things go against him, and the times when the market goes in his favor, he makes more. That is what makes a successful trader. So trading is not a game where you need to be right most of the times, but whenever you are right, then you need to make more, and whenever you are wrong, you need to lose less. For the sake of those who are new, let us take less than a minute to explain candlesticks that we have right in front of us and what they mean. As you can see, price rallying up, creating series of higher highs, lower highs and higher highs with a cluster of green candles. These green candles right here, they signify buying pressure. While on this hand, as you can see, price rallying down, creating series of lower lows, higher lows and lower lows with a cluster of white candles. These white candles signify selling pressure. While a candle that is neither green nor white, like this candle right here, it signifies indecision in the market. So back to the discussion of the day. Candlesticks, these are the language of the market, because at all times the market is either signaling buying pressure, the market is either signaling selling pressure, or the market is signaling indecision in the market. So as you can see, this buying pressure right here in this green candle in this box. This green candle signifies that price has bought up to this point, this candle. And this whole candlestick you see here, it is a structure on its own. Firstly, we want to explain what a mini structure means, then we are going to go into what a bigger structure means, because this you see here is a mini structure of a candlestick. At the bottom here we have the open, this is where the market opened, and at the top here this is where the market closed. So this structure is a structure that indicates buying pressure. So when can we conclude that price has bought higher than this? It is right when what? It is right when price breaks the high of this candle, because here we have the low at this week, here we have the high, and you can see this second candle, it broke the high. So now we can say that this mini structure has been broken further to the upside, because right here we are on the weekly time frame. Let us take another example. You can see this candle right here. As we have learnt earlier, a green candle signifies buying pressure, while a white candle signifies selling pressure. And in this green candle here, we have buying pressure. We have buying pressure to the upside, which signals that the buyers are active here. And this whole mini structure we have here is a structure filled with buying activities. So when can we conclude that this structure has been broken further up? You can see this subsequent green candle is what it pushed further up, which indicates that this structure has been broken. Now from the weekly time frame, let us go to the 1 hour to look at the structure that we marked in the red box. You can see this is where we marked in the red box. Let's go to the 4 hour so we can have a better view. This is the structure we marked in the red box. This is the structure we marked in the red box. This is the particular week. This is the particular week. This is the particular week right here. Let us go back to the weekly time frame to see. This is the particular week we marked in the red box on the weekly time frame. And now let's go to the 4 hours. And we can see it here in the 4 hours. So what do you see in the 4 hours? You can see that price broke it up. Let's go back to the weekly so we can have a perfect view. You can see this is we marked the high here. Let us mark the low as well with this blue line. So you need to know that the first rule that qualifies a break of structure, because you need to understand two things in market structure. Firstly, there is a break of structure, and secondly, there is a confirmed break of structure. So right here we can see that this is the low we marked with this blue line, this is the high we marked with this blue line. So as you can see, once price broke this, what happened? The structure continued going to the upside. So the first thing that qualifies as a break of structure is once price spikes. Price does not necessarily even have to close above, because this candle that signifies buying pressure that broke this structure on the 4 hour, you can see it's closed above. But even if it doesn't close above, even if it is just a mere wick, even if it is just a mere spike, that structure is broken. Are you with me? That structure is broken. However, a strong signal that confirms a stronger break of structure is when we have the close of more than two candles. You can see this green candle closed here. This white candle selling pressure, it's closed above as well, and this candle also closed above. So we have more than three close above. I hope you see that. So what qualifies as a break of structure is once price spikes a particular structure. So let us erase all our annotations and get back to business. So as you can see here on this 4-hour time frame, we have a low, we have a what? We have a structure here. We won't call this a higher low because this low is not broken. For a structure to be confirmed as a higher low, then there has to be a lower low. Like right here we have a higher low, here we have a lower low. But you can see this structure here was not broken. So firstly, let us understand the basics of market structure. Then we can learn more on what a break of structure means. There are three kinds of market structure. We have the ranging market, which is a structure when price just stays in a zone without strong movements. And we have the trending market, which could be an uptrend or a downtrend. So right here in this red box, what we have here is what is a ranging market, because you can see that price is not moving with momentum. Price is just oscillating within a particular resistance to a support. Price is just oscillating. Price is not making significant moves. Let's take another example of a ranging market. You can see. So now this particular range, you can see this is the high right here on this white candle. You can see this wick on this white candle. Let's mark it on this white candle. So you can see once price broke it, price went to the upside. So immediately price spikes here, this structure is broken. So for you to qualify a break of structure, you just need the zone to be broken, even if it is just a wick. Let us take an example where a zone was broken with just a wick. So we can know the first rule that identifies as a break of structure, because the essence of this lesson is just for us to know what identifies as a break of structure. You can see we have a structure right here. You can see this is the resistance, this is the high, this is the low. And what happens, you can see that price just spiked here with a wick. You can see price spiked here with a wick. So it means that this particular high here is broken. You can see price created a lower low, a higher low, and a low. Then here it spiked this zone. And what happened, you can see that subsequently price went up after spiking this zone. So just seeing this spike, just seeing the spike of this zone, then we can conclude that the structure is broken. You can see, then we can conclude that the structure is broken. It is that simple. So it is not till price closes above here, or till you have two prices closing, because the essence of this lesson is what is a break of market structure, and that is what we are explaining right here. So whichever zone you mark as your structure, once price spikes, then you should know that such structure has been broken, such structure has been invalidated, such structure is no longer virgin. It is as simple as that. For instance, you can see this structure here, this higher high here. We'll call it a higher high because once price created the structure, price went up. So this will be a higher high. We are going to release a different lesson on how to identify a market structure, but for this is what is a break of market structure. So you can see that price just came to this zone, price did not break this zone. So this is not a break of market structure. But you can see this zone right here. You can see that price didn't just spike, price broke this zone before it went up. So just this break here, we already have a break of market structure, because this structure here has been broken to the downside. So regardless if price closes below, it doesn't, it has been broken to the downside. So here we have a break of market structure, and you can see that even though this structure right here still held, it was still validated by the market did not break it. But you can see the structure here, it didn't hold. I hope you are following. So once you have price spike any zone you mark as a structure, then you should conclude that it has been broken. You see this high here, it is a structure, and immediately price broke through, we can conclude that this structure is broken. Because let's say your stop loss is in this high, you would have been taken out, so this structure is broken. And you can see right here, marking this structure, even though the price was in a range, you can see this is what we call a range, as I have explained earlier. You see little less movement, so before price now broke out. So the first indication that price always gives at the break of the structure is a spike. Price does not necessarily have to close above. So whichever zone you mark as a structure, once you see price breaking it, then you should know that such structure is broken. And if such structure holds, you can see right here, this is the low we marked, you can see price broke it. However, just because price breaks it, it doesn't mean price will drive lower, as this is a false breakout. But regardless, once price spikes a structure, then it is what? Then such structure is broken. Let's say for instance this zone, you mark it as a structure, and you can see price just broke it with this wick. And you can see once price broke it, you can know that this structure, this high is broken. And as it was broken, what happened later, you can see price went up. So just knowing this and incorporating it into your trading style, you'll be able to know the zones where a structure is broken and the zones where a structure holds. And I hope from this, I hope your trading gets better. So for instance, let's say in this zone you're expecting price to buy higher, but just seeing this spike, you already know that this structure is broken, and you need to be careful, and you can see price broke lower even before it later went up. Because trading is a sensitive business, and you need to pay attention to every detail that you see on the chart. You can see this structure right here, the high of this day. It's a particular structure, and what happens, you can see price broke it with a wick, which means that this structure is broken. And whenever a structure is broken, you must always be very careful, because it means that that particular zone is weak. Whenever a structure is broken, what does it mean? It means that that particular zone is weak. Let's go to the monthly. Let's go to another pair. Let's go to the monthly. Just as we have already explained what a candlestick means and how it is a mini structure on its own, and you can go to the lower time frame to see how things played out on a particular candlestick. So now let us go. Okay, I just went even on the monthly. So this particular month, let's mark this green candle. You can see this big green candle. So you can see this structure, the structure of this month is not yet broken. It is still intact. It is still what? It is still intact. Let us go and check a month that is broken or how price breaks it. Let's check it. Okay, let's just take this month for instance on gold. So this particular month, you can see you have marked it in a green candle. So now let's go to the daily so you can see. So you can see this whole month, this is the structure for the month. And you can see that price is in a range. And when you go to this month, what happened? The price is in a range. So you can see that this green candle is the one that broke the structure to the upside. This green candle, it broke it to the upside. So let's take this month for instance. This is the eye of the month. We'll go to the monthly to check. That's the month of January. So let's go to the monthly time frame. Okay, this is the month of January. So now on the daily, let's go to January on gold. So look closely, you can see that this particular high was first broken with a wick. Price did not even close at first. So it was taken out with a wick, and what happened subsequently? One close, two close, three close, and you can see price rallied up. So it is as simple as that. So what qualifies as a break of structure is once price spikes with a wick, however you have marked your structure. So plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, subscribe, share, and follow for more.